Hi, friends. For any of y'all who commented on my stock crash, or are we heading toward a recession, on April the 3rd, I had recorded that with a bad microphone, and you can barely hear it. It's almost like a whisper. Got several comments about that. Well, that might be a good thing to try to listen to while I update what happened today. Today, okay, I work with a lot of people that have money in the stock market, and they're always asking me stuff because they know I've been in the stock market since 14 when I bought my first stock. So they ask me things. They know I've picked some fairly good ones, like Apple when it was $10 or $20 a share, and I kept on buying. I bought it when it went up to 100 and 150. I could have bought it again recently about that price, 150, but anyhow, I went back up today. Not as high as it will, and I just use that as an example. Of why people think that I'm a guru with the stock market, and I'm not. I'm as fearful as anyone else about entering into a new stock, because I have on my statement that comes out each month showing what I've done in the stock market. I have 2 or 3 stocks that's worth zero. Now you're asking, why would you keep a electric car company that's gone down to zero? Why would you keep a what was that other one? Blockchain that became global gaming. If you look up global gaming, you'll see it. It's worth zero. And then a marijuana stock that's worth zero. Why would I keep those? If I'm so daggone smart in the stock market. I keep it to let me know that any decision I make to buy a stock, study it, look at the trend over 1 year, 2, 3, 4, 5, if you've got that available. Usually, if it hadn't been going up in a year, I don't want to touch it. Or if it's brand new. Now, what I'm going to share with you is I'm getting all these phone calls over the last 2 weeks. Stock market's going down. What should I do? Well, you could do 1 or 2 things, 3 things. Of course, you know you don't want to sell it if it's down. And they say, well, that's what I was going to do. That's what my advisor told me to do. What advisor? My financial advisor. Well, what are you calling me for? I don't have a license in giving advice in the financial field. Yeah, but you know what you're doing, they told me. And the financial advisor, he won't tell me how good he's doing. Oh, I see the problem. I see the problem. He wants to make commission. You're going to one of these where you walk in and you pay. You don't just pay a flat fee for an hour. They're going to take a commission out. You don't do it like I do. I go online with Fidelity or Vanguard or TD Waterhouse, one of those. Zero commission, buying or selling. Now, here comes another person. What should I do? Get the same answer. Nothing. You can sell it. You could buy more. Or you could do like me and hang on. And if something looks especially good, since I have so little dry powder, and when I say dry powder, I'm referring to cash on hand to buy stocks. I say, buy an extra share of what you think is the best stocks you got. Buy an extra share and be happy. You'll be happy when everything goes back up again. Same answer for everybody. Don't sell, because in 2008 I lost everything, borrowed money, and went back into the stock market, and in 2 to 3 years paid off my house and put money in a retirement system. I did that because when it crashed, stocks went down below $1, and the ones I was buying, I used John Templeton. He's an old mutual fund guy who's passed away. He became a mutual fund guru by buying any stock below $1 on the New York Stock Exchange. Well, since then, the NASDAQ, as they call it, is the biggest one, and I think they've pretty well done away with the American Stock Exchange. So I said, in 2008, I started borrowing money, and all my friends said, "What a dumb blank." My financial advisor, they told me their financial advisor told them to get out of it before the total market crash. I said, "Oh, did you ask him if he did or she did?" They didn't. They probably didn't. But they were telling people that were panicking to sell out. Now let me tell you one thing, that this is very, 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 very important, because I'm older than a lot of you, and this was 2008 with the big crash, where I could buy Circuit City for 33 cents, a lot of other stocks for 33 to $1, lots of other stock. I think Ford was 95 cents. That was my range of buying, and every day I looked online to find out what the lowest stocks were, what's fallen the most, and if I recognized them, I bought them, and I borrowed more money, and then I called the brokerage and I said, brokerage company, it was TD Ameritrade at that time. I said, and they were charging a $7 fee for buying a chunk of stocks, or of the same stock, or if you sold stocks, even if it was one share of a stock, it's still $7. Since then, it's gone down to $0. So I'm there paying all these brokerage fees for buying and selling, begging for money to spend in a falling market. My friends at work are looking at me and wondering, and I worked in the mental health field then, this guy inherited the same problem that he's helping people with. He's gone crazy. So then I called the brokerage firm, and the stocks went up high enough to where I could get what's called a margin account. That means that they loaned me about how much I had stocks. So if I had 5,000 in stocks, they'd say, okay, you're good for credit for another 5,000 worth of stocks. But listen to this. If they start going down, we're going to start selling them off. We're not going to lose money. But we'll loan you the money so you can make money and we can make money. Okay. It's called a margin call. when all of a sudden your stocks start going down past what you have in your account. I never had a margin call. Okay, I'm going to speed this thing up. And I'm going to say 2 years later, after all the antacids I took at night, fearing the stock market falling further down, I would buy and sell some stocks 2 times or 3 times the same day because they were going up that fast. And I'd say I better take the profit here while it doubled, and then the next hour or two it would double again. I'd say I better get back in it again. So at sometimes I would buy and sell the same stock a couple of times or 3 times at the most in a day. So I built it up, and it recovered so fast when it went. It went so fast after 2008 and 9 that I was able to pay off my house and have a fat retirement account. Now, that sounds real strange after you knew how much I had lost. I lost $125,000 in my business just the year before. That's why I was out of money. And I paid all that off by selling what retirement I had. So now I wasn't even aware that the stock market had crashed in 2008. I just started looking at the prices and saw they were real low and started buying. So I actually thought I was going to be living on the street when I lost that $125,000. What happened is my grant money for seeing people with alcohol, drugs, and gambling was pulled away from me and given to larger facilities. I was a one-man facility. They cut out the small guys. Okay, this is Department of Mental Health and Addictions in Indianapolis that did this. They had some help. It wasn't just them. The big guys, the big institutions were grabbing the money and persuaded them. I have no sorry feelings toward it now. So I'm down there thinking I cash out everything. I think I'm going to be living on the street. But I wasn't going to go bankrupt. Okay, that was 2007. 2008, the crash. But I sold my stocks that was in my retirement at the highest possible point in about 2007, right before the crash of 2008. Is that a God thing? A God thing that I got out of the stock market before it crashed. Paid off all my debts. I had 11 credit cards, and the interest alone was $1,200 a month. Can you believe that? About as much as $1,200 a month. I would call every Monday, try to negotiate a lower interest rate. It was 29.9% at that time, before that became illegal to charge that much. 29 point, or was it 19.9? I think it was 29.9%. So that's the fix I was in. So anybody that would loan me money to get back in the stock market, I said, this is how John Templeton started his mutual fund, and he was considered one of the best mutual fund managers in the world, and still is, but he's dead. And he's merged with, you'll see it at Franklin Templeton. They merged, I think, before he passed away. Okay, now I'm putting groundwork here to let you know how volatile the stock market can be and how you can't just listen to your advisor say either sell it all or you're going to lose it all. Every single person, and I'm not saying there was even one left that didn't do that I knew. Every single person who had a stock market advisor, every single person sold out, and never did the advisor call back and say, now's a good time to buy. Not a single one. And here, years later, they're living in housing. Section 8 housing. I'm not saying anything negative about it, but they could have been living in at least a medium income, if not a higher income mansion, like me. Okay. It's not an example of a mansion. This is more of an example of a man cave. I'm in the basement. I need to clean it up. Okay, so I replace all my retirement money. I end up getting a better car than the $300 cars I was driving, and I also paid off the house. And paying off this house was pretty hefty then. Did all that within 3 years after 2008. After the crash, I paid everything off, had a retirement account back, had the house paid off. I called my buddies. When did you get back into the market? I know you sold out. Your advisor told you to sell out. They said, well, we didn't. We just spent it on the cruise or this, that, and the other. I said, well, it sounds like he did you a great favor, didn't it? Didn't he? Yeah. Now here's a couple things that I want to share. Let's cut it right there from 2008 and go to today. I had people calling up the last few days. Should I get out of the market? Should I just hold it? Or should I buy more? Well, if you're like me, you're not going to buy a whole lot more because I only got less than $500, about $700. That's not in stock. So, but I'll be spending that. I bought gold, a gold company that was doing fabulous. It tripled last year. So here I am. Why is this flashing off and on? I said I'll give you a couple hints. If you can't take it, if the stock market falls 40% overnight or in a day, you shouldn't be in the stock market because it will recover. And you'll be told to sell it all. So if you can't take a 40-50% fall with your stocks, if that's going to cause you to jump off the bridge, don't get into the stock market. I can't give you any alternatives what to get into that's going to make you money. But if you can't take that risk, and if you can't stomach it when it happens, like it's happened to me. And I've wrote about 7 of these rodeos of these recessions. If you can't take a big loss after you decide to get out of the market, stay out. Number 2, regardless of what you hear on TV or by your financial advisor or by your friends that think they're financial advisors, remember this one key thing, and not a single person I've told this to does anything but brush it away. Oh, that's not true. That's not true. It depends on what's going on in China. It depends what's going on with Trump. It's what's going on everywhere. This is the truth. You will not hear this again if you've made it this far. If anyone's heard this before, let me know. Quote, the stock market will do what it wants to do when it wants to do it. Jim, can you go over that again? Yeah. Let me get my hair in place. If you don't remember anything else, and this is why advisors will be wrong, why all the speakers on CNBC and all that will be giving opposite views of the stock going up or going to go down tomorrow, is because they don't know. The stock market will do what it wants to do when it wants to do it. Now, in ending, I want you to prove me wrong on this. Get a chart from the Depression in the 30s, I guess, 1930s, to now, even though it's fallen quite a bit recently. I want you to look at, it's going to go like this. Now, if you close in the gap a little bit, it may go like this. So there'll be dips. But if you go with the whole length, it's going to look like this. You'll say, where were the dips? They didn't matter, because the stock market is going to go up because the companies are good. But like I said, I never finished this. Why do I keep my losers on my statements? The marijuana stock that's worth 0, blockchain stock that's worth 0, gambling stock worth 0, and there's another one that's 0. And I've had people, when I show them the statement, because they want to see proof that what I buy sells. So I'll show them. I'll show them my statement. They'll say, you did that with just 7 stocks and mutual funds? Well, not always. Sometimes I had less. I had fewer than 7. And sometimes, if I wanted to get risky, I'd go up to 10 or 12 stocks. They said, well, tell me one thing. You don't have those 0 stocks that you've had for the last few years. They're not part of your 7 now, are they? 7 securities. I got a few more than that now. I bought gold the other day. I bought gold, and Broadcom makes chips. I think it's probably much better of a chip company than most of them that make chips for cars and phones. That's my own opinion, and no one recommends that one. No one recommends it, and I can almost tell you through intuition why. And this is my opinion. Broadcom is such a huge chip company that it's selling a lot of their chips to the other chip companies like AMD, and they had a new high today. AMD, I owned it not twice. Wrong thing to do. I would have doubled my money. AMD. If you get something like Broadcom, and I don't know that I'm right about this, I just heard it in a fleeting moment on TV that almost every chip company grabs a part of something that they're making. So there has to be a Broadcom for them to fulfill making their chips. Well, I'm underwater with Broadcom, not making, hadn't made my money back. So I keep buying more. Share here, share there. You gotta understand, I don't buy chunks of 100 shares. I used to. I won't tell you about losing 14,000 in Sprint. In Sprint telephone. 14,000, lost it one morning. I put a limit sale if I had all my money in it. I put a limit sale if it fell 15%. It fell 15% the next morning and skyrocketed. And I get a phone call from Chuck Bear. Chuck Bear says, we were in talking all the time about stocks. He says, well, I guess you're $14,000 richer now. No, I said I'm $14,000 that I could have been rich. I could have been, but I sold it. I sold it when it fell. I'm down on it, Chuck. It went down to where I had a limit to sell it. It sold it all off and bounced back up. True story. So, why am I sharing my failures? Because if you can't take the losses, don't get into it. And I've been buying it since I was 14, and I'm 76. The reason I had hard time remembering it, that happened January the 13th, when I turned 76. Okay, so what can I say about today? I didn't sleep last night due to just injury, and so I got up at 1 o'clock, and at that time, the stock market had been going down and down and down. So I get up, get dressed. It's about 1:30, and all of a sudden the stock market. This is the truth. You look it up. You look it up. Look it up on TV, financial news, or look it up on the internet. Stocks went up to $40 a share. Apple went up $15 a share, if I remember, and they were considered dead because we weren't going to do much business with China anymore, people thought, and they had so much in China. They said, get out of Apple. That was the first thing I was being told. Get out of Apple. Get out of Apple. No, I'll buy more Apple as it goes down half price. And then today, Zoom. I I didn't buy any more Apple. Instead, I bought some gold, and I may have bought a couple more chip stocks, that Broadcom I was telling you about. So what I'm trying to tell you is two things. If only buy big stocks, I used to buy penny stocks and lose all my money. Penny stocks. Stocks actually a penny to, they call them now $3 or less a share or $5 or less a share. I lost all my money in them. Then it's just been recently I've gone into the big stock market. When I say big, I'm not talking about Dow Chemical, I'm not talking about Honeywell, I'm not talking about IBM, I'm not talking about anything like that. The biggest one I have is Apple. Apple can buy a whole country if they want to. So it did not hurt me at all when I saw them falling and falling and falling and falling. I knew Tim Cook, the president, had good relations with all other countries. He could have the products made elsewhere outside of China. And that's, today was the first turnaround. So when you read this, check it out on your computer how the stocks went today. It is now May the 9th, 2025. You can turn on the TV right now. If you get CNBC, that's CNBC. If you get that, you'll hear them talking about, this has never happened before. You'll hear this too. This is just like 2008. That's when I was almost living on the street, 2008, because it crashed so much. We were almost as low as 2008, not per share, but went down that fast. And they kept on referring to 2008, and I remember that so well because I had to close my business. I cashed out my retirement and paid off the bills. All the credit cards, I paid it off, and I started looking for a street to live on. 2008. Okay. If you can't take the loss of 20, 30, 40%, or even 50, don't even. This is a general mark. I would tell some people, don't get into it, because I don't want you committing suicide if it falls 50%. Don't get into it. I don't want you losing your house. I don't want you losing things if it falls 50%. It's not, the only time it did that was in 2008 that I can recall. Second thing is, and this is very important, and you will not hear this again. If anyone has heard this, please send me a note saying you heard somebody else say this. You're not the only brain talking today, and that is, the stock market will do what it wants to do when it wants to do it. And it did it today. It did it today. It did what it wanted to do. It got tired of falling. And it skyrocketed. And many people are $20, $30, $50,000 better off today than they were at midnight. Some are $500,000 if they're big buyers. They call them whales. These are people that have so much money. When things fall real low like this, they buy them all up. And then when it goes up like this, it's like a whale jumping out of water. Hey, I I don't have all the answers, or I wouldn't keep my losers on my balance sheet, would I? I wouldn't keep it there to remind me, study, do research, learn all you can about each stock that you buy. Otherwise, if you buy something that someone tells you to buy, in a year you can put it on that list of zeros that it went bankrupt. Okay, I hope I gave advice that some people can use. And listen, if you listen to my channel, I talk usually without notes. I had to look to see what day it was when I did that video that's no good. Well, it's good. It's just you can barely hear it on the are we going headed toward a recession or stock market crash. This totally unedited. It's unscripted, straight from my gut, as all of them are. And let's see, we've gone way past what I usually do, but if you're in a stock market, I don't think I've said anything that you wouldn't want to hear. You let me know. You let me know if you want to be a subscriber. Let me know if you want to like it. I'm not hunting or anything, because I only have about 500 subscribers, so you know. But if you want to subscribe, you'll always be my friend. Take care, God bless you, and have a good rest of the week.